Multi-lender sequencing. What is it? What's okay and what isn't? What's stacking? Let's get right into it. Multi-lender sequencing. Having a first position that's very good. Having what I refer to in the business as an upside down triangle. When you borrow, you almost never will have a better second, third, fourth position relative to the first position, that senior position. They have the senior lien position. And so many times, and you want this to be the case, that's the strongest, the largest, the most competitive, because everything comes after that becomes slightly more aggressive and lesser in amount. Almost always, almost every time, without any exception, is that first position your best position. And so sequencing, how do you do that? Well, a good example too is if you're going for an SBA loan, you would want to in advance get your AR financing. You would not want to get AR financing after somebody has encumbered your accounts receivable or all of your business assets. For up to $350,000 SBA term loan, they're not really looking for your accounts receivable. They're not. Almost most banks, let's be clear, most banks. Some banks are making exceptions. They're even going to want your primary residence. Not all banks. Go and do not work with those banks, to be clear, up to $350,000. So you would want to arrange in that sequence your accounts receivable based lending prior to engaging for an SBA term loan. There's really no debt service necessarily associated with, say, factoring. And sometimes factoring makes sense, and some very large companies factor, and other times it doesn't. It can be more costly, and maybe you need a line of credit, an AR ledger line of credit. But sequencing, that's what the focus of this video is. It's about sequencing. And again, the best sequence is having that best, most respectable finance, the largest amount in that first position, because every position after that is going to be a product of that first position. They're not going to write a more competitive second, third, fourth, fifth position. They're just not going to. Why? In case of default, if they need to perfect the lien, they're that sequence in line. They don't want to be fourth position for a really good note. They're going to be comfortable with less risk at that juncture. You'll have the highest amount of risk tolerance in that first position. So sequencing is important, and you do not want to stack. Stacking is not a good thing. I know in the internet today, everyone has this strategy, this hack to get as much capital as possible. You don't want two institutions competing and thinking that they're in a certain position. You don't want those types of conflicts. These can draw legal challenges. They can put you in a very bad position. Unfortunately, these bad lenders and bad actors, they will try to stack you. They will try to do this magic and have funding calls timed appropriately so that one isn't the wiser and that you've gotten two at the same time and you got over on them. Unfortunately, now you have also doubled the payment. What it really did was give somebody who is not a financial business consultant, who doesn't understand business eligibility like you do, it gave them double the commission. Now you have double the payment. Not you, of course, because you know better and you understand your business eligibility. So not you, but that's what's in the market, and that's not sequencing, that's stacking. So we do not promote stacking. It's very important to have the strongest first position and to understand that you want the 10-year, the large $350,000 note, that to be your first position, or the $1 million collateralized to be your first position. Otherwise, it's going to be an impediment that you have several SBA $350,000 unsecured term loans. I've seen it. I've gotten people out of those. I've restructured them. But there are certain requirements and parameters that make that very difficult to do. So sequencing. You want your best position to be that first position. You want that most amount of capital, the lowest cost of capital, meaning the interest rate, the longest term. That's what you want in your first position. You need to be aware that if something has an all business assets lien, in the industry they call ABA lien, you need to know that. So if you're going to get an AR facility, the bank's not going to tell you this. They're not going to want to give it up. They're not going to hand off your accounts receivable if you give it to them in accounts and in all business assets lien. They won't. So you need to utilize that in advance, and then you'll still be able to be eligible for a $350,000 SBA term loan, for example, based upon your debt service coverage. So sequencing is very important. It's one of those topics where everyone, I think, online, not everyone, of course, but many people in this online age of trying to hack or cheat the system or have this certain trick. It's not a trick. You do not want to get into a legal situation where we have two institutions that were under the impression because you illegally signed a contract that stated you were in that position, that's a conflict, and they both think that they're first position. Very, very important. It can go sideways. And you just don't want that. You want to grow and develop the business. You want to do things the right way and be smart. And of course, what happens too for your business eligibility in the future, you're a known stacker now. When they review your application, they'll see this. When you're trying to refinance out of it, it might stop a bank from being comfortable refinancing both of those. So it might sound good, and it might be good in the moment to feel that you're eligible for twice the capital and you've gotten over on them, but it's not the case. That's going to be there in your application. So sequencing, so important. And you could have a third position, fourth position, fifth position. You can have an eighth position loan. Just about you're being smart about it, being very smart about it. And again, maximizing your working capital and maybe utilizing the equipment finance, not getting a large term loan, then buying the truck outright. Maybe you finance the $50,000 vehicle. You probably should. And then you maintain your working capital. So now it's a third or fourth position. And they don't care. Why? Because it's asset-based lending. It's secured to the vehicle. In case of default, they'll come take the vehicle. Understand sequencing. It's so important. Do not stack. Be a responsible borrower. It will come back to bite you. It'll be expensive. It's not what you think. And in a world where everyone has this trick, I'm telling you here now, it's the upside down triangle. You want the best position to be first, and everything follows in sequence after that.
Learn the course for free at businesseligibility.com.